Three, two, one. Hello and welcome to Demand-Driven Soy Markets. I'm Ken Dahlmeyer, the founder and principal of Demand Side Ag. And first we want to thank the Kansas Soybean Commission and the Kansas Soybean Association for the opportunity to provide this content for you today. Specialty crops have a, well, not entirely undeserved reputation for being risky and, frankly, a pain in the straw walkers. In the past couple of years, the revenue generated from commodity soybeans has exceeded the operating costs, which has lowered grower interest in specialty markets. That spread is predicted to collapse, however, in the 2023 and 2024 crops as input costs increase and crop prices reach their new trading range. Is it time to look again at specialty markets? Let's first consider how we think about these markets. The driving force behind these markets is customer demand. So let's call them what they really are. They're demand-driven markets. In a demand-driven market, the customer, whether a domestic shopper or an international grain buyer, has a specified need and has identified added value for a specific type of soybean. This may include physical characteristics such as higher protein, clear hilum, perhaps a specific oil profile or a minimum seed size. It may also include social values that are important to their customers, such as sustainably grown, non-GMO, or USDA organic. A mindset of being a merchant, not a missionary, is critical to long-term success, and it is wise for all growers to consider upvaluing their production plans while utilizing existing capital assets. In this video, we'll review 6 items as we consider demand-driven markets. We'll look at predicted profit margins for commodity row crop rotations in 2023. We'll consider historical premiums in demand-driven soybean markets. Is there global and domestic demand for non-commodity soybeans? What capital assets are needed? What about weed control? And finally, who do I talk to about demand-driven markets in my area? So let's look at the economics of commodity soybean markets in Kansas. For the 2023 crop, the crop budgets are found at the link down at the bottom of this slide. I think it's interesting that the original slide was, the original budget was made in the fall as people were starting to think about next year's crop, and then revised mostly downward in May of this year. This table is an excerpt from the Kansas State University's 2023 crop budget website. The 2023 commodity soybean crop will cover variable or operating costs, but as you can see are hit and miss to cover total costs associated with the crop. As you would expect, eastern Kansas soils and rainfall patterns will provide higher and more stable grain yield to bring revenue above the break-even prices. Modest cash rent, well, compared with the I-states anyway, allow for reasonable profit potential and likelihood of break-even. But what happens if there are unexpected costs? Lower yields, or perhaps above trend cash rent costs. In Illinois, this picture actually resolves very differently. Increased crop revenue does not imply, much less guarantee, improved net profit. While this data is based upon the situation in Illinois, the trend is common across wheat and row crops, with crop revenue softening, cash rents rising, and crop input costs holding steady. This study found the likelihood of corn revenue below $1,228 of 55%, and the likelihood below $1,303 per acre at 66%. Likewise, soybean revenue below $902 an acre at 47%, and a 70% likelihood to be below $977. Not very good odds. So let's look at premiums. So what is the purpose of a premium? A premium is simply a market signal that says a customer wants to change a historical production practice to satisfy a higher value demand. Historical premiums vary considerably based upon the demand-driven market you wish to engage. For example, non-variety specific, non-GMO soybeans may have a 60-cent to $1.20 per bushel premium, whereas organic, variety-specific soybeans may see a 2x to 3x of base price premium based upon the market need. General rules of thumb are that a 10 to 15% premium should be expected for non-variety specific markets. In 2023, Corteva's Plenish soybeans were above $2 per bushel premium, going to Bunge grain with an added premium bonus for on-farm storage. The historical high for organic soybeans was almost $50 per bushel briefly in 2022, but don't expect that to be common. Premiums for demand-driven markets will vary from year to year and from program to program. Be sure to verify the purchaser's program prior to making your decision. So is there really a demand market for soybeans? Every week, U.S. exporters field inquiries from buyers for non-commodity soybeans. In most cases, we're not able to respond or fulfill those inquiries due to a lack of supply or challenges in aggregating enough supply to the ports. We're getting inquiries for 50,000 metric tons, or about one ocean-going vessel per month, for non-GM soybeans from China, South Korea, and Pakistan. At times, we'd received inquiries for vessel quantities of identity preserved soybeans that met only specifications for hilum color or protein quantity, maybe damage, and so on, and were not necessarily dependent upon GMO status. Did you know that the United States still imports over half of the organic soybeans that we need to supply organic chicken and egg markets? Revenue from organic soybeans is often 2 times to 2.5 times conventional due to demand being greater than supply. Whether you're considering GMO Plenish high oleic soybeans, non-GM export markets, or domestic organic soybean markets, the demand market for soybeans is strong. So what do I need for capital assets to participate? Really, the primary asset for success in demand markets is an open mind and a merchant attitude. Since you've stayed with the video up to now, we'll assume that you're still interested in learning more about demand markets, so you have an open mind. Second, you need to give yourself time to prepare. Most demand markets require different weed control, and seed needs to be ordered early. Don't jump into a demand market in March. Design your operation with a focus on quality over quantity, since you will be paid to deliver number 1 soybeans and not number 2. A well-maintained combine that is designed to deliver quality and not just fast acres is essential. Historically, red combines have been preferred to combines of other colors for grain quality, but engineering improvements and skills training have improved the quality of soybeans harvested from all colors. Pay particular attention to harvest moisture, reel and thresher speed, and winnowing fan effectiveness when you're harvesting. On-farm storage opens all kinds of opportunities for demand markets, since you can then participate in buyer's call contracts. For demand markets, bins of a more modest size are preferable to large tanks because the volume of the identity preserved product is oftentimes lower. Grain quality is also affected by conveyance and grain drop. Grain belts are always preferable to augers, and any steps to reduce grain drop height pays dividends in better delivered quality. Other than these things, the physical assets are not much different than commodity soybean production. The elephant in the room, of course, is weed control. Non-GM soybeans will not have in-season glyphosate options. Likewise, organic acres will not permit any synthetic herbicide applications. Work with your ag retailer to understand your options for weed control. Remember, Corteva's Plenish soybeans are glyphosate tolerant and may provide an entry point to demand markets if glyphosate is a requirement for your operation. The best advice that I can provide is to consider your best ground for demand markets and not try to level up revenue from marginal acres. Marginal acres are oftentimes weedy with less predictable productivity, which do not set you up for success in a contract-driven quality marketplace. The next piece of advice is to enter demand markets in a controlled and stepwise manner. Commit to being successful on a few hundred acres before advancing to a few thousand. Have a plan in place for escapes and when issues occur in the early going. So where do I go from here? To learn more about demand markets in Kansas and your area in particular, contact the Kansas Soybean Commission and the Kansas Soybean Association at kansassoybeans.org. In addition, contact the U.S. Soybean Export Council at usec.org for contact information of soybean exporters near you. Also, the Specialty Soya and Grains Alliance is an association of companies focused on the production, service, and shipping of soybeans to international demand markets. If you have questions about production or logistics, they are an excellent source. Again, I want to thank the Kansas Soybean Commission and the Kansas Soybean Association for allowing me to provide this content. Thank you for your attention. If you have any questions or comments, please drop me a note at ken.dahlmeyer at demandsideag.com. Have a safe crop season.